Good morning, good evening, everyone. Thank you for joining us today. I'm Shipra Sudan and I'll be moderator for this session. We are here to explore most critical challenges organizations face today, optimizing working capital and strengthening customer relationship through invoice to cash led transformation. Before we start, please note that this webinar is being recorded and will be available on demand on Fractal's channels. Attendees are currently in listening mode only, and the chat is disabled. If you have questions during the webinar, please send them via the Q&A box at the bottom of your screen. We will address all the questions during the Q&A session. This is how we have structured our discussion today. We're going to spend some time in understanding why invoice to cash is a boardroom priority today, followed by what are the possibilities of using analytics and AI to solve this and take care of the challenges across the process. And then we invite our esteemed guest for the panel discussion, followed by audience Q&A. This webinar is hosted by Fractal. We power every human decision in the enterprise, and we have been doing this for the last 25 years. Customer centricity is core to everything that we do for our clients. And that is reflected through a very high Net Promoter Score, NPS, that we have of 77, where the industry average is sitting at 45. We work with more than 100 Fortune 500 clients, and Fractal is focused a lot on innovation and R&D, and we spend a big amount of that on the side of R&D, big amount of our revenue for R&D. We are a very strong team of analytics enthusiasts, over 5,000 employees, and we have been certified 8 years in a row as Great Place to Work. A lot of products we have in the market with a lot of patents under our name and multiple published research papers as well. Fractal focuses on how do we bring together AI, engineering, design, and domain to solve for existing business problems. We'll move to order to cash now. Now, why we are starting with order to cash is this is one of the most critical processes that we see in any organization. And order to cash, mostly irrespective of, I would say industry and practice that we talk about, this is one of the most fundamental process that's there in the organization, which helps you convert your revenue into cash, right? And most of the organization, I would say, because of silos, fragmentation that we see, and being a, I would say large process starting from sales order to cash application, and it's very manual as well, which leads to errors. And that's why we see being, again, as one of the most critical processes in the organization, we see a lot of challenges. Organizations, they either have solved for, I would say, some of the areas of this end-to-end process, or the focus is on, I would say just having a lot of people with some RPA taking care of, few of the issues that we see, again, point solutions, right? Now, what we're going to talk about is how some of the mature company, maturity in terms of analytics, they are looking at solving this problem. Order to cash starts from sales order, and then we move to, the various processes that we have in between. Most of the organization, they'll have sales order, credit, order management, billing, collection, dispute, and cash application under the process. And traditionally, we have not seen pricing embedded to it. It's very important and critical that we have pricing as well, or pricing function, I would say, completely integrated with this process. And why this is important is throughout the process, we are not just looking at improving, I would say, collection or decreasing your bad debt expenses and all, we are also looking at how do we improve the customer experience. And we're going to talk about in detail improving the customer experience as well, right? Now, overall, if I have to, these are multiple components, and we are talking about many systems which are to be integrated to take care of this end-to-end process. Any error, as I said, it's highly manual as well. Any error that happens in any of the upstream processes that we have, it is cascaded to the downstream processes as well. And hence the entire chain, I would say, gets disrupted, or there is a multiplicative effect on the overall outcome. We need to look that though this is such an important process, why it is not solved so far, and what do we need to do to solve this. If we look at some of the numbers, we see that this is again a lot of organization. They struggle with late payments or long cash conversion cycle. Lot of invoices, they fall into dispute, which leads to deduction, revenue leakages and all. And as I said, this is still highly manual across multiple organizations. We see a lot of time is spent in these manual activities, which can be completely automated. And automation is not just from taking care of, again, point sections of the process, but building a smart, intelligent process around it, right? Why the old book fails is there are ERP systems, there are CRM systems, there are your other auto management systems that we're talking about, your point of delivery information. These are not integrated, unified, and a lot of customization on the ERP side is needed if we have to do that, which is difficult to take care of. Organizations, because of the kind of acquisitions they've seen in past, they'll see multiple instances of same ERP system or multiple different ERP systems, and these systems, they do not talk to each other, right? Again, this is still manual. We see thousands of people just taking care of order to cash in any organization, manually calling each and every customer. And any insights, if I have to get through the entire get for the end-to-end process, that's not available. We have fragmented dashboard, again all siloed. Dispute would not know how a collector from the collection side is interacting with the customer, and whether the collection would not know that the customer has raised a dispute, and that's why this is not the right time to go and remind the customer for the same payment again. So how do we bridge the gap? That's where we need agents, RPA, AIML, and human in loop all come together to deliver this insights and intelligence at a velocity. So we are talking about a unified system which is smart enough to understand the interaction that is happening across the end-to-end process that we saw, and is able to identify where the value sits and how do we take care of the entire process in an intelligent manner so it is all smooth and smart. When we talk about this process, right, what I showed you is a traditional process. With the tools that we have in hand, it is very important that we now start reimagining the process. And this is one example of that. Collection management, which starts with, you need to understand how many open ARs are there, what is the aging of this. And then you need to understand, do I really have to reach out to all the customers? Or can I just filter out the customers where we know that the payment is going to be coming either on time, or maybe, if even if it is going to get delayed, we know that, it's going to be delayed by 5 days. And that's what the trend that we have seen in past, or it's going to be delayed by 10 days. Again, trend by what we have seen on the past. And do I really have to connect all the customer and connect all the customer on the or post overdue? Or can we have a strategy in place which helps me identify who are the high risk customers, and can I start connecting with these customers, maybe, minus 10 or minus 20 days in advance, before your invoice is overdue. Net net, what we're talking about is we need to reimagine this entire process, not just look at it in the traditional way and just again use automation tools to take care of areas where simple automation is required, which is all rule based. We are introducing agentic AI, generative AI. Generative AI, it is able to draft all the communication that is needed. Or if I'm talking about collection management, I have again thousands of collectors who are reaching out to all the customers on daily basis. Can I give them either through email or through phone call? Can I give them that script of the phone call that they have to make, along with all the important information that is needed to interact with the customer based on the historical interaction, based on the multiple documents that we have got, related to the interactions that we're going to have, maybe, contract document, your PO document, your invoice document, and so on. So the idea here is, how do we reimagine the process and optimally use the existing solutions that are there or existing tools that are there in terms of an optimal combination of RPA, human touch point wherever needed, your agentic AI, generative AI, and all, right? Now we are talking about human touch point wherever needed. We are not saying that it's manual. However, there are places where we want human to be in loop to review or to approve certain things. And that's where we are talking about, reimagination of the entire end-to-end process. And as I said, the process which starts from sales order to cash application, there are two major component of this process. One is from sales order to where we take care of the order fulfillment, and the next is where we talk about invoice to cash application. What we are going to focus today is invoice to cash application. We call it invoice to cash. When we look at this process, invoice to cash, I2C, with what I've discussed, with the possibility of using the valuable analytical tools, organizations can create billion-dollar impact. And when I say billion-dollar impact, this is an example where we are talking about an organization, large enterprise, where the revenue size is around 50 billion per annum. We see a lot of cash is stuck because of late payment. The cash conversion cycle is very long, which is impacting my DSO. And hence, we say that almost, 1% of the cash is stuck, of my total revenue is stuck across late payments. There is heavy manual effort that we're talking about, thousands of people. Cost of serving one invoice is around 10 to 15 dollar per invoice. And most of the large organizations, if we talk about, the number of invoice ranges in millions, right? 5 million, 10 million, 15 million. So if you do that calculation, that's a very significant amount that organizations are spending just because it's highly manual. And then there are other challenges. As I said, if there is anything which is, these are hubs, right? Multiple systems interacting with each other, connected to each other. And because of that, there is anything which is happening in the upstream process has got a cascading effect. Until the time it comes to the end of the process, it multiplies as well, right? So dispute, deduction, leakages, ERP-driven inefficiencies and all, if we club everything, we are talking about the organizations can save around more than 2% of their revenue if this end-to-end process is managed efficiently. We'll show you one video on this, which talks about how we have solved this invoice to cash process, again, through the combination of available analytical solutions that we have or tools that we have.
Every year, global enterprises lose billions. Not to fraud, not to theft, but to something hidden in plain sight, their invoice-to-cash process. Wondering how? Well, it's missed follow-ups, manual disputes, payment delays, and disconnected systems. This isn't just inefficiency, it's cash trapped in chaos.
Meet Cogentiq Invoice-to-Cash. Agentic AI that doesn't just manage, but optimizes and transforms your entire cash cycle. It's built for finance teams that value operational precision and measurable outcomes. Cogentiq tracks over 300 KPIs, all in real time. It autonomously classifies deductions, resolves complexities with Gen AI, and prioritizes intelligently to reduce DSO. Cogentiq triggers intelligent nudges and alerts to act at the right moment. It also offers a network of specialized autonomous agents, trained, tuned, and constantly learning, guided by the orchestrator who connects the dots across your invoice-to-cash value chain. Cogentiq empowers every collector, analyst, and finance leader with contextual insights. Built on 25 years of AI excellence and trusted by Fortune hundreds globally, Cogentiq isn't just another AI tool, it's your competitive edge. Lead the future of finance. Book a demo now.
We have just seen how Invoice-to-Cash product, Cogentiq Invoice-to-Cash, brings predictive insights, automation, and orchestration into the process. Now, I'll turn to our panel finance experts to get their perspective on what this means for the industry, and we'll also explore real world challenges, opportunities for digitization, and evolving role of finance as a driver of business value. So I'll start with introduction first. We have Ashish Saxena with us. He's a senior finance operation leader with extensive experience in reimagining global procure-to-pay and invoice-to-cash value streams for large multinational organizations. Having led teams across diverse geographies, he has driven end-to-end transformation across order-to-cash and P2P with a strong focus on automation, AI adoption, and process excellence. Ashish brings a unique perspective at the interaction of technology, finance, and operation, shaping strategies that enhance customer experience, unlock working capital, and build future-ready finance organization. Thank you, Ashish, for joining us, and welcome to the discussion.
Thank you, Shipra. Thank you for having me, and I'm really glad to be a part of this one. Learning as I'm sharing.
Thank you, Ashish. Next, we have Suparna Bhattacharya. Suparna is a versatile finance leader with over 25 years of experience across infrastructure, power, healthcare, automotives, semiconductor, oil and gas, and FMCG retail. Having started her career at Bata India, she has held key roles at Schlumberger, Gap, and Horiba, where she also led supply chain, IT, and corporate communication, and set up a global capability center. At present, she is CFO of Schneider Electric Infrastructure Limited, driving digitization, transformation, and suitable growth. We are happy to have you, Suparna, here.
Thanks, Shipra, for the wonderful introduction, and very happy to hear the insights of my co-panelists and also share my ideas. And also coming from, a full-fledged CFO role of running an organization where invoice to cash is an extremely important process. I'll be happy to share my thoughts. Thank you.
Thank you, Suparna. And next we have Samir. Samir is a distinguished finance leader with over 3 decades of experience, including 19 years as CFO for Agilent Technologies in India, and prior to that with Genpact and PwC. He has extensive expertise in strategic finance, setting up state-of-the-art finance-focused global capability centers, and enterprise-wide digital transformation. A CA, CPA, and a seasoned advisor, he's widely recognized for his contribution to build future-ready finance organizations. Welcome to the discussion, Samir.
Thank you, Shipra. Looking forward to the discussion.
Thank you. Okay. So we'll start with a few questions. And again, the idea is to understand with all the experience, our panelist has got, they all have, They've worked over 2 decades in this industry and on the processes that we are talking about. So maybe I'll start with Ashish first. Ashish, what do you feel? What makes invoice to cash such a pressing priority today? And what factors are driving the need of the change?
Invoice to cash is a peculiar process in any finance work stream where you're going from revenue recognition to revenue realization, right? And at any given point of time in the overall finance value stream, both of those start and end points of that value stream are the most critical ones for any organization which is operating for profitability. Why it is extremely important now, or has been extremely important, but it's I think the realization is kicking in more now, is primarily because of the nature of how manual the entire effort is. And with revenues steadying or not rising as they would have wanted, pressures on cost are also triggering the reasons why people are starting to look at how does this process work. You did mention as part of your overall pitch earlier that there is a lot of dispute management that happens during this entire process, and I can definitely vouch for it that a clear differentiator or a clear, I would say, metric that defines how well you're managing your dispute process is the DSO for any organization. The one way that you can definitely look at DSO going in the right direction is by ensuring that your bills are right the first time, your customers understand them entirely, and you have lesser and lesser disputes on pricing and discounted methodologies. So I think it is becoming critical by the day, and most organizations that I worked with earlier and my current organization has immense focus on how do we make this better, not just for our own selves, but also our customers.
Perfect. Thank you, Ashish. You framed it really well. So, yes, that's what it is. There is as much that revenue growth can happen. And, I think that more than that, that's why the disruptions that we have seen in the industry in recent 4 5 years, the focus has a lot moved towards how do we manage our internal systems to optimize or reduce cost, I would say. Right. Thank you for sharing thoughts on that. I'll move to Suparna now. Suparna, beyond, I would say, AR, right, accounts receivable, what role CFOs and business leaders assume in advancing I2C transformation?
Thank you for the question. And actually, I'll talk about my journey over the years where, business has seen a lot of evolution in the AR function. And the concept of the finance function within any organization moving from the accounting, which used to be account stack, used to be the core earlier, to a business partnering concept. And finance, I mean, in the business partnering concept, is often front-ending the business along with the business leader. So, in such a situation and seeing that kind of an evolution within the finance function, the AR, the criticality of AR is kind of, the support, it's the whole, and the entire idea along with the business people is supported by the finance people in terms of, how an organization has to plan its entire AR. And when I say business partnering, it is not kind of a back-end process, or it's not, something which happens as a post-mortem. Right from the pricing, the strategy, the payment, the collection, and also the accounting of that receivable. Because very often we find in many organizations, we receive a lot of money, but we do not know how to knock it off against which invoice. So that kind of a seamless process is something where the finance along with business should really front end. Because these are times in such a competitive scenario, we need to focus on getting business than to, have a lot of manual intervention into these kind of processes. So these such processes should ideally be automated right from the sales order to the, to the knocking off of the invoice. And the focus from the finance business partners should be ultimately in partnering with the business, so that uh, focus in the with the revenue, and also have a seamless I2C process within the organization. And also, I would say that in this process, it is very important that all the systems and processes are also very agile to take care of the changing needs of the market and the customer. So this is what I will say, that, beyond the typical AR function, the CFO's office or the finance function has to really do front-ending work today than having a post-mortem work of just the accounting.
Thank you, Suparna. So what we are saying is invoice to cash is no longer just a back office process or back office operation. It is actually a boardroom issue that we need to tackle. And that's why the team which is taking care of that should work very closely with business in the strategic decision making, that what are the areas that we need to act and how do we use this entire process to optimize cash management, right? Thank you, Suparna, for that. Samir, moving to you, we talked about that there are many, many systems which are involved in this entire process, right? We talked about, your ERP system is there where all the transactions are sitting. And then you have CRM system where the customer related information or some of the customer interactions that we've had around sales, pricing, that information is sitting. And there are so many other multiple systems. So data fragmentation is a significant challenge in this entire process. Now, the question is, how can we establish a truly unified invoice to cash perspective across ERPs, across CRMs, order fulfillment, and the other finance systems that are there?
Sure, Shipra. That's a very pertinent question. But before I come to it, let me just quote a famous saying which we all learned while we were doing our academic accounting education. So it goes like, if revenue is vanity, profit is sanity, but cash is the only reality. And that's how important cash flow is. And I2C is a unique process in finance. Probably apart from investor relation, the only process where we speak with the customer as well as internal folks. Now that makes it very, very interesting, challenging, and the most critical according to me. Just maybe a year and a half back, cash was freely available. Governments had printed so much of money. So we had 3 or 4 years in between where it was not as much of a boardroom focus as it is now. And sanity prevailed. And now, cash is back in the metric for every person. Forget about a finance person. So to your question about, having data available and data coming in from multiple sources is the key to have this particular process run effectively. You very nicely explain the whole chain, the upstream and the downstream process. So it begins with, configuring your price list in the system, which will probably lie in your CRM. You will have your existing customers, your new customers. You will have the pricing logic in the CRM. Maybe for your strategic customers, you will give discounts. Maybe you are evolved enough to say, okay, this particular customer doesn't pay me on time, so I'll bump up the price. And that's sitting normally outside of your CRM. Now, in many companies, the CRM sits inside the ERP. And then, once you've invoiced it, you have to make sure that the customer was ready to take the shipment, because our objective is to avoid all the disputes. I mean, there are companies which, let's say sell equipment and the customer site was not ready. So you have to have a customer requested due date onto the PO. So many things have to be kept in mind for you to even have revenue recognition, which Ashish talked about. This is one process which touches everything. So once you have the invoice, hopefully right the first time itself, then you come to kind of looking at how's the customer behavior been in the past. Is it even a credit-worthy customer? And that's a different ballgame altogether. You should have systems in place, whether within the ERP or preferably outside through a Agentic AI platform, where you dump the AR to leading credit agencies like Dun and Bradstreet, which will run it past Duns or Paydex in India or S&P or whatever, which suggests you a credit limit, a credit profile, high risk, medium risk, low risk, which you should further substantiate with your own experience coming in preferably again from a Agentic AI platform, which has passed 3, 4, 5 years of data. It is tracking, delinquencies in that industry, and then kind of see whether we have to call this customer or is this customer paying on time. You could have beautiful metrics like Waddle, which is a favorite metric of mine. It's called weighted average days late, which the Agentic AI platform beautifully calculates to tell you historically, based on the pay term, how late they were supposed to kind of, how late they were in the past. And all this is very much required because at the end of the day, I have to predict the cash flows to the street. How do I predict my cash flow if I don't even have a handle on my I2C? Now, going forward a step ahead, there is a direct correlation between DSO and DPO. In fact, you back calculate and say, okay, this much is my expected DSO and this is going to be my DPO because you keep a buffer. So it's a very interlinked, intertwined process which depends on how good your data is. A classic example of garbage in, garbage out. And if data is residing in multiple boundary apps, like for most companies it is, very few companies have it in one place. It's important that you have access to that through a data lake or directly through an API, and you continuously use the data and send back the data. As I said, maybe if the aging is going up, you have to give a prompt to your AR credit platform. Hey, relook at the credit profile. I think it's no more medium. It's actually going to be high risk. So it's very important that you have access to data, you're able to read the data, come up with insights, and then send it back to the upstream or the downstream process. It could be your sales guy. Hey, I'm not able to get through to this customer, it's not paying up. Next time when you go, can you please go and inquire? But that is only as an exception. So that's my answer, Shipra. Slightly long, but I thought it's good to put in some context around it.
If I can say, in the last 2 minutes, Samir, you summed up everything that I deal with these days.
I know. So we have to have the sales guys sell, not collect. But then, yeah, if you're not able to collect, you have to use them as legs and arms and also our eyes to go and have a look at their sales office, factory, send it back, revisit the credit rating, blah, blah, blah. So it's an intertwined process. And I understand, Ashish, for such a big company, you handle entire, Q2C and P2P. It's a busy job.
Yeah, so the DSO and DPO both resonated well.
Absolutely. And thank you, Sameer, for sharing insights. We talked about that unified data is must today, where we are getting your sales-related data, we are getting price-related data, we are using some external sources to understand credit profiling of the customers, right? And this is all to ultimately improve the customer experience, right? And also, very nicely, and that's what Ashish mentioned, touched upon the liquidity, understanding the liquidity situation as well, right? How much inflow is going to be there on any given day, and how do I take care of my outflows with that, right? So thank you so much for sharing that. I'll move to Suparna again. Suparna, every CFO aims to reduce DSO, right? And Ashish touched upon that. And a lot of organizations, we talked about that, almost 50% of the organizations, they struggle with late payment, right? And they have very high DSO. If my payment term is standing at maybe the average payment term is 45 days or so, my DSO would be standing somewhere at 80 days, 75 days, right? So, in your experience, which AI driven strategies have the most substantial impact when we talk about streamlining this entire process to cut down on cash conversion cycle?
Okay. So see, for a CFO to run the organization, can you hear me? Am I audible?
Yes, yes,
Yes,
you
we
are.
can.
Okay. All right. So a very important thing for a CFO to run the organization is having data in front of the CFO. And every AI strategy, every operational strategy, whatever, actually needs a lot of data to be there, and very often we struggle with to get the right data. So, like you said, the payment terms is 45 days, and we have a DSO of say 80 days. So there might be many gaps, in terms of the payment days, in terms of from when is it calculated, the day of shipping the goods, or when it reaches the customer, the input terms, etc. So having the right data in place is extremely critical for any business, for any CFO, to understand what kind of strategies we need to have in terms of an AI-driven I2C process. So, uh, and one very important thing which I've observed over and especially in the last 10, 15 years, because in the initial times, all organizations had different kinds of softwares. Sales has a different software. The ERP in accounting is slightly different. The dynamics of all the ERPs are different, and it's difficult to have information and because the systems don't talk to each other, and one system gives some information, the other system gives some other information. The logic is different in one, the logic is different in another. So the most important ask of a CFO, and I will say then wherever there is an AI driven software or something like that available, and I am the customer for that, for me the most important thing is data. And any strategy, anything which is implemented needs to give the right data for us to have the right predictions and the right corrective actions that we need to do. So for me, the primary thing is to get the right data, then action on that data, and then of course, have an efficient cash management system. And when I say the data and this, it starts right from the time of, selection of a customer, the credit rating, the credibility of the customer, the past record of the customer, and and when I say the process of AR doesn't end with just the collection. We also need to see if there's an associated bank guarantee with the customer, whether that is collected, or due to some dispute 5 years later, the bank guarantee goes into encashment. So it's AI plus a lot of human intervention required to have an extremely seamless process in terms of what an organization or what a finance team would require from a solution, from an AI driven kind of a solution. And that's the expectation that we ask from uh, the users of such AI tools.
Rightly said, Suparna. And Suparna, there are now AI tools or agents which are available to take care of data as well. And Simi talked about garbage in, garbage out. And that's why, and we all discussed that the process is highly manual, right? And it is highly
Yeah,
prone to
yeah.
human error as well. So when we talk about using AI, one is to sort the data, and the other is to, take care of most of the processes which are automated, which are, sorry, manual. So we are talking about, agentic workflow wherein you have these AI agents taking care of most of the things, and they are able to manage it more efficiently as they have access to information, they have memory, they can decide, they can think, and that's happening all without error, right? So we set the system, and the new system that we are talking about is going to be significantly efficient or highly efficient from the existing traditional system, which is going to take care of all the future data issues as well. And with this, maybe Ashish, to you, you talked about data, right? And the organization, I think, and that's what Suparna was alluding to as well, that data is the biggest challenge if we have to solve any problem, and specifically when we talk about invoice to cash, because multiple system interaction within these systems, and this is all very fragmented. Are you using, and what's your thought on, I would say, using AI or similar analytical tool to solve for data issues?
See, in any large organization, specifically when you're dealing with I2C, you're talking about a big customer base. The first thing that you will need to evaluate is what is the segmentation of that customer base. For example, I've dealt with or I've managed order to cash or invoice to cash processes in a different organization where my customer base was pretty much pharma companies and of the same type. So it was more a business to business selling. But in a telecommunication company that I'm in right now, my customer base is fairly segmented, right? So you have a business to business customer where your contracts could also be highly bespoke. You have a business to customer where you have consumer customers, having a mobile phone or a broadband connection from the company. So one is your customer segmentation. Then is the tools that you use internally to serve those customers from an invoicing perspective. And then do those tools manage data at a customer entity level, or do they manage data all by themselves as a standalone? So how unstructured is your customer data in the billing systems is what will define the way forward from where you are. Now, there could be two potential solutions that I can think of. One is you look for a perfect environment and you first go through the entire process of adapting AI, which is first eliminate process steps that you don't need, then simplify, standardize, and then get to automation. That's your ideal way of kind of applying AI. Or you look for areas which you could possibly use as low hanging fruits and apply agentic solutions which link those low hanging fruits together and give you a consolidated output that you could utilize towards improving your overall end cash position. Ultimately, for any organization, that's the end goal. Now, you could choose the direction that you could go with, whether it's a perfect solution or a solution that you would want to say, I would keep solving what I can solve for till the time I reach perfection. And I think in my experience, the second one has definitely helped us because an ideal state environment will possibly be too far to fetch. We would, in a business environment that we all operate, where all of a sudden there are tariffs imposed by the US government, and suddenly the GST rates change, and suddenly one country decides that you could actually back bill by 3 years, and suddenly one country decides that you cannot back bill beyond 6 months. There is a lot of implication of regulations in our environment, and hence fix what is there in front of you, which is a sizable chunk, and you can fix it today. Align all of them together. Use agentic solutions to map each of those together, and you would ultimately be in a better place than what you are today. So that's what I've been doing personally, and that's what I think has paid off pretty well up till now. And as I mentioned earlier, because I lead global teams, those regulations are fairly varied. Within Europe itself, each country has a different regulation when it comes to invoicing our customers or data handling. So with all of those complications, I think the second route has always worked for me. The ideal environment will possibly be a far-fetched dream.
Absolutely, Ashish, and thanks for sharing those points. And I was just thinking, we are almost 45 minutes into the discussion, and nobody touched upon tariff. So, Ashish, you did that. We cannot have any discussion complete
Do I get
without,
full marks for it?
of course. So yes, now you talked about regulations as well, and but these are again, country-specific regulations that we're talking about. Samir, I'll move to you. Right? Ashish mentioned about regulation. You talked about customer experience, customer satisfaction, right? how do you see organization and how important it is, to take care of the or I would say strike a right balance between maintaining the governance and compliance when we are talking about incorporating AI into finance processes. So, what is the the balance between efficiency gain and compliance? I would say.
Vipra. So I think this is a topic which comes up in every webinar, in every kind of discussion. And there is a reason why it comes up because there are apprehensions. And whenever I try to give in my viewpoint, I always say that AI means augmented intelligence. So that actually helps you take all the intelligence which has been gathered from all countries, from all different ERPs, from all different automation tools. For example, I love the way the South American economies have kind of taken the Q2C process to the next level. And maybe I'll just spend 30 seconds to explain to the audience who might not be aware. Now, Mexico, Brazil were the first countries to introduce, after a certain threshold for a B2B company, the invoice has to be exactly in the same format. So you cannot have different forms of the invoices. It has to be sent both digitally as well as by paper to the government as well as the end customer. So you can't underreport your revenue, you can't inflate your revenue. And this is not it. Once you get a payment against that invoice, you have to send a payment receipt to the end customer as well as the government. So you can't even hide your working capital. So they've taken away the possibility of any non-compliance and added to it, if when you send an invoice for revenue recognition, in 3 days, if you don't reject it, revenue is taken for granted. There is no possibility of any kind of a sales return, blah, blah, blah. So, sometimes it's ironical that economies which are not so considered to be well advanced teach you a lesson or two. So, coming back to your question, in terms of compliance, in terms of regulations, I think once we start using, platforms like what we offer in Fractal, we have the knowledge of what the regulations are. We know what's happening. We are tuned to what the governments are wanting to do because they don't introduce a legislation out of the blue. They have consultation, they have a lot of interaction with the trade bodies and so we kind of make sure that all our products, including agentic ones, including those which are generator ones, all the ML algorithms which we build in are compliant. And as we get to know about what is going to happen in one geography, like Ashish mentioned, that even in the Eurozone, every country has a different transaction tax. Everybody has a different withholding tax. These two are the pain points in any I2C process. What is the transaction tax and what is the withholding tax? Based on my estimate, if you issue an invoice with the wrong transaction tax, which is a possibility because your ERP or your invoicing platform was not updated, the customer pays you based on what he thinks was the transaction tax, and there is a mismatch. So I think, as far as regulation is concerned, I would say that all AI platforms actually do a better job because they're also evolving. They are aware of what's happening all around the economies where they operate. They learn, they talk, and these fears, although I would say have merit, but I think largely they're getting addressed. And give it a few more quarters, I think they'll become as foolproof as now, if not better. Sorry, they'll probably get better, if not as much as they are right now.
Thank you, Sumi. Thank you for sharing the example of, I would say perfect systems. And till the time we get to that perfect system, we'll have to, do, I would say, these plugins, take care of the process through these plugins and all. And you beautifully captured this is actually augmented intelligence, what we are talking about. Now, quick time check. We have 10 minutes. Yeah, Suparna, sorry. Go ahead, please.
Yeah, just to add to what Samir said, he touched upon, the regulatory compliances, etc. There's certain internal compliances also from finance when we audit, when we see the I2C process, which also means what kind of whether the sales or the business is giving some special payment terms without the requisite approvals, some special discounts, some special uh, advantages to a customer. So it's even the internal compliance that the tool should help the finance teams to check on the internal compliances and processes also, in addition to the external regulatory requirements. So it has to be, a right balance between the external as well as the internal compliances in such a system.
Rightly mentioned, Suparna. Thank you so much. So I'll have just one last question, and the question is for all of you. I'll request just to take a minute and help us with that. In your views, what's a truly world-class I2C, invoice to cash, and how it's going to look like in next 3 to 5 years? Ashish, you want to go first?
Yeah, I was actually, you sent me on a thought spree. A truly world class. I would not say it would be something which has zero defects because that's bound to be there. But yeah, it should be a situation which is minimal defects throughout the value stream. And I did see a question pop up in the Q&A section as well, which is what I also would want to allude to right now, that sometimes you do need to ensure that there is exception handling within the process. So as part of the world-class process, see, I have personally believe customer experience and employee experience can never be 100%.
Yeah.
Right. And I also believe that automation also can never be 100%. Okay. So as close as possible to 100 you are, where your entire value stream is, let's say, operating on a Six Sigma with 99.9996% of your transactions going through the value stream, you would still have that decimal places of transactions which will fall into the exception queue. For that, you would still need people, because ultimately the reason why we are here in an automated process is because our people showed us the way of what exactly do they do with each of those transactions. So in an ideal environment, your exception handling process will be functioning only as an exception handling process, and you will not be touching all of your transactions, which is what you do in the current environment.
Absolutely. Thank you, Ashish. Suparna, you want to go next?
Okay, so the basis of any such kind of agentic option available in the market should have the right logic, and also have and should be agile to take care of the market and the customer requirements. And I would like to make a statement that automate what is necessary and what can be done, but at the same time humanize the remaining, because we need human interventions, we need customer relation, we need our own, our own judgment on certain things in our business. So with automation, humanization continues to be there, and it has to be a balance between the two.
Thank you, Suparna. Samir, you want to share your thoughts?
No, Chopra. So what I would want to see the I2C process in 3 to 5 years from now is the ability to predict not only the DSO, but stuff like aging, stuff like, is this particular customer or industry going through a rough phase? Can I use my DSO to peg my DPO and get into discussions with my vendors? Can I compare my DSO with that of my competition when they declare the results today, and within the next 1 hour, I can compare my DSO with them? So I think, those are things which can definitely be done because machines are definitely becoming intelligent. And with the data which we feed them and all the external intelligence which we gather, and we marry the historical performance with what we see as the global macroeconomic, I think we can be in a position to predict our cash flow from operations a lot better. And one day, in the I2C process, we can easily include treasury income, blah, blah, blah. And the job of a CFO would become easier because pretty much at a click of a button, they should be able to predict the entire cash balance up to an accuracy of excess of 92%, 95%. And these models will keep getting intelligent over quarter after quarter.
Absolutely. Thank you, Samir. So what we talked about is, having access to all the possible information, creating systems which are almost autonomous, I would say, with human in loop. And we need people to take care of exceptions, to take care of, at places where strategic decision making is required, or while we are dealing with some of the strategic customers, right? With that, we have a few more questions, and I know we just have 3 minutes to wrap it up. Maybe we will pick one question, which is what role does I2C play in improving customer relationships beyond faster collection? Who would like to take it up? Otherwise, I can answer the question. Ashish?
I can do that. Well, I2C as part of our iterative process in itself has a big leg on customer interactions, right? Which are not customer interactions only because of a dispute on an invoice. These interactions actually shape the experience of our existing customers. You mentioned NPS for Fractal earlier, right? NPS for any organization is also dependent upon the customer experience that they had during the I2C process. And NPS as a metric defines how well would the customer be the promoter for getting more business. So I look at I2C also as an arm which silently is a revenue generator in the sense that how does it maintain NPS for their customers and hence has customers vouching for the service for a particular organization. So that's what I feel. This is, I personally think, an iterative angle that we sometimes tend to overlook, but we shouldn't.
Absolutely, rightly mentioned, Ashish. The entire process where we start from sales order to, I would say, finally managing dispute and reconciliation at every step of the process, all the sub processes, every step you're interacting with customer, and you're interacting with customer in a different way, whether we are talking about placing the order, delivering the order, negotiation on the price side, or managing the disputes that they have raised, taking care of deductions, right? Every stage you're interacting with the customer, not just about around collection wherein you're calling the customer, but and that's why you rightly mentioned, once this is taken care of very well, then we definitely increase the customer's experience, customer satisfaction level, and more satisfied, more happy customer means more business, more revenue. Thank you for sharing that. Now, I know there are a few more questions to be taken care of. However, the time that we have, please feel free to reach out to us anytime you want. And you can reach out to us through Fractal website, different channels that you have. And I'll quickly summarize what we discussed today. And I hope all of you, you gained information, understanding of how organizations, the way our experts discussed, they are managing the challenges that we see across this critical process. And again, maybe we have discussed about this. I heard this point a couple of times, but I2C is strategically become a boardroom priority, and it is no longer just a back office operation. Operationally, AI, automation, generative AI, these all are together reshaping how we manage collection, how we manage pricing, dispute, along with governance and compliance, which is absolutely non-negotiable. With that, I would like to thanks Suparna, Ashish, Samir, and all the attendees for joining us today. Hope this session was insightful and helpful. Thank you so much, and have a good day.